Hey, it's Market Moves coming at you. Lyft just released its financials to the world so we can know what the numbers behind the company are before the IPO comes out. I'm going to be one of the first investors to go over this with you, so stay tuned. This is going to be a great video. So here it is in all its glory, the S1 statement just released by Lyft. This is going to give us insight on the company that's never been released previously. So this is the first time we're seeing these numbers, understanding this company in depth like never before. So if you don't know who I am, I'm Market Moves. I put out videos every day, so please subscribe to this channel. I put out content on trading, technical analysis, company overviews, pot stocks, and more. I have a playlist on Uber versus Lyft to the top right hand corner. Check that out. It's going to be the best video series you can watch to gain knowledge on Lyft and Uber's IPO that is coming out. So we're going to be going over this, and I'm super excited just to go over this with you. So please stay till the end because we're going to put these numbers into my spreadsheet to see how these numbers line up long term with Lyft. So if you don't know what's happening, basically Lyft is going public, which means it's letting investors buy shares on the public market to invest in this company. So basically this company was private up until this point. It has been very, very hard to invest in this company because it was private. Now that it's public, anybody can put their money into Lyft and now soon Uber. So a lot of crazy things happening in the financial market, a lot of exciting IPOs this year. And here is the first page of the statement just talking about their common stock plan to issue shares to us, the public market. And not only is this document going to give us financials, it's going to give us a better look into the company's numbers. So right here, we have riders at 30.7 million, riders in 2018, drivers 1.9 million in 2018. We'll have to check that out, see how it lines up with Uber. I know Uber gets a lot more. They get a lot more revenue. They're a bigger company. They got to this market first, but I like Lyft because it got to the market second. It watched Uber take all the strong steps to get around legalization and all the rules, and it just basically put itself in the position to easily get integrated into this system and just followed Uber's footprints. And it's a very interesting company because it just grew so quickly and it got into this market so easily. So I do love the fact of how quickly it is integrating and growing. And I do think the growth potential is huge for this company, and you can just see the numbers right here are massive right now. Yet again, this is another page that reaffirms how quick the growth has been with this company. You can see that in 2018, we had $2.2 billion in revenue, $8.1 billion in bookings, and this has only gone up from the previous years, and this is what excites me. So the next thing is we have 220 pages in this prospectus on the IPO. This is very normal that they put all the information. This is the first document to be making this company public, so it's going to contain everything. I'm just going to pick out the important pieces of this and just pick out the best parts for you as the investor so you can be more educated on this company. Just to give you a quick idea on the overall growth in the past 3 years, in 2016 we had $343 million in revenue, so 2016. The next year we had $1.1 billion. That's about a 3x from there. And then the year after that we went up to $2.2 billion, which is another 100%. So every year we're increasing revenue 100% or more. This is kind of like a pot stock. It has tremendous growth opportunities, and you could see it the past 3 years. And the one thing I like about Lyft compared to Uber is how much money they're losing. And that may sound terrible, but they're not losing as much as Uber, and I do like that. It shows right here they've lost a consistent amount. It doesn't fluctuate from quarter or year to year. 2016, 2017, 2018, we've lost between $600 million to $900 million, almost $1 billion. It's not that bad. I've seen a lot of even developed companies out there losing multi-billion dollars per quarter, maybe $1 billion per year. So this is not terrible, and I do think the potential in this market is huge to where the point that this can be evened out and possibly turn a profit in 2019. So I do think this is more manageable than Uber. Uber's losing a lot more. They're in the spotlight for some pretty negative things every once in a while as well. And obviously, every American has a car. 95% of the time, they're not using it. Obviously, it would be good to just have someone in that car making them money. Maybe you can hire drivers. But the big thing is, with the future of this company, I see autonomous driving just taking over the world soon. Tesla can do it. A lot of these cars can do it. They're already autonomously driving Lyft in Las Vegas. So this is already happening in a certain state, and I do think this is the future. As you can see, this is a big plan for them. This is something they're really focusing on, and they're investing a lot of money into autonomous technology, and this is just going to boost up those profits because they're paying a lot to those drivers. If they take the drivers out, they're making a lot more money. As you saw, the bookings, the money from bookings was $8.1 billion. They're giving away about, let's say, 70% of that to the drivers, and they're only making $2.2 billion in revenue. So that just shows you how much they're paying to drivers. You cut out the drivers, you make tremendous profit each quarter. So that's the one thing I'm watching out for in the future. I'm very curious to see what happens with autonomous driving in this company. Just some quick statistics on the drivers out there. We have 91% of the drivers driving less than 20 hours a week. So think about it. You're on your lunch break. Maybe you're a mom dropping the kids off. You want to put in some hours until they get out from school. Then you can. Under 20 hours a week, that's very small. And a lot of people can manage that and make some income on the side. So I do think that the network of drivers is going to be huge for this company long term. And I just want to see them integrate autonomous driving with that without losing all their drivers. That's the big thing I want to watch. And I do like that they have almost 10% of veterans and armed forces that are driving. That's pretty impressive. And they're giving back to that community, which I do like to see. And then down here for the riders, we have 46% use their cars less because of Lyft, saving the environment, ride sharing, and all that stuff. 35% do not own a personal vehicle. So that market is always there. We're always going to need people who need rides who don't have a car. So that's a big thing for Lyft long term. And the next thing I want to point out is just their revenue statements and their income, their net loss. I just want to point out that their total cost and expenses, this line right here, is not increasing as much as revenue is some years. So that's very impressive. Think about it like this. If they're increasing their revenue 3x and their costs are only increasing 1x or 2x, then they're keeping more per year. They're bringing in more for their investors. And if they can just keep doing that long term, bringing in more revenue than more cost, then they're going to offset that balance to the point where they're going to be bringing in so much revenue and very little cost 10 years from now. They're going to be bringing in lots of profits because of that. And they're going to be able to invest in technology, get into autonomous driving fully, maybe get their own cars out there, do some exciting things. And it's all because of this gap between revenue and net income, revenue and cost. We want to see that gap always staying pretty far apart. Another exciting thing about this company is the assets to liability ratio. It's coming in at above 2, so 2 to 1. We have about $3.7 billion in assets and $1.4 billion in liabilities. So that's a great balance. That means the company's healthy and it's solvent if anything happens fiscally, if they need to pay off debt quickly. So again, that's not a red flag. That's actually pretty exciting in my opinion. And this is going to be the key metric for ride sharing companies. We want to see the active riders increasing. It's kind of like Facebook with daily or monthly active users, daily active users, Instagram, Snapchat. That's the metric for them. For ride sharing, this is the metric for them. We want to see active riders, revenue per active rider. We want to see that trend increasing, and it really has. We've seen active riders go from 3.5, and this goes all the way up to 18.6 in only like a 2-year, 1.5-year span. And then the revenue per that rider is $15 in 2016, all the way up to $36. So what this means is we're getting more riders every month, and those riders are spending more, and that trend is increasing. So they're being more comfortable with this company, and they're using it more. Basically, that's what it comes down to. And the rides are increasing. So that's shown here too on the bottom. We've had 29 rides all the way up to 178 per month. Quick note for all you value investors, Lyft is not planning on giving out a dividend anytime in the foreseeable future. They don't give a dividend now, and they don't plan to. So this is good for you to know long term. If you're looking for a dividend company, to pay you. They want to retain those earnings for the company, and they don't want to pay them out to their investors just yet. So I really hope you enjoyed Lyft's first financial document, the prospectus on its IPO that's coming out March 18th. I really hope you got something out of it. Please share this video with someone who would enjoy or appreciate the company or investing in the IPO. And also, I will be releasing the rest of this video, part 2, in the next couple. Please subscribe to the channel, like and comment. Would greatly appreciate it. Market Moves signing off. Peace. For more information on the Market Mover Indicator, free consultation talks, and courses, head to the website marketmovesmatt.com. Don't forget to hit that subscribe button and check out the latest and popular videos I have uploaded.